Gold hit 3,600 today for the first time ever. Price of gold was up 4% on the week. It's now up 37% on the year. 37% for the price of gold.
Gold just made history, hitting $3,600 an ounce for the first time ever. Traders scrambled to take profits, but Peter Schiff says this is no ordinary rally. It's the opening shot of a financial earthquake. Silver is climbing past $41. Gold miners have doubled this year, and now a Supreme Court case could give Donald Trump the power to fire Federal Reserve governors, killing the Fed's independence once and for all. Schiff warns this will trigger a gold shock unlike anything we've ever seen. Stay with me, because today's headlines are more than just market moves. They are the beginning of a new monetary era.
Now, I've been doing my best to get my audience to buy gold, buy silver. Silver was only up 2.8% on the week. I say only. That's still a big week. Silver closed the week at just about $41 or just over $41. Gold didn't hold 3,600. It closed, I think, around 35.90-ish. You know, traders tend to look at these round numbers and take profits. I wouldn't be surprised if on Monday morning, when the U.S. resumes trading, we gap up in the price of gold well beyond 3,600, which is why you shouldn't wait till Monday to buy your gold. In fact, don't even wait till the end of this podcast. If you are listening to me or watching this on YouTube, pause. Just press pause. Don't worry, I'll still be here. Just pause it. Then go to Schiff Gold and buy some gold right now and buy some silver. Don't wait. Don't wait for me to finish the podcast. This is too important. Put it on pause. Go buy some gold and silver at schiffgold.com. And when you're finished buying it, then come back and watch the rest of the podcast. That's how important it is. Right? I want to make sure that people get aboard this train, right? Unlike the Trump train that's going to end in a wreck. This one has got a long way to go. Again, 41% year-to-date gain in gold. Look at the gold mining stocks. The GDX has now officially doubled on the year. So basically, we're through 8 months of the year, right? And we've had a doubling of the GDX. Double. I remember in April, I put out the special report, the best way to buy gold. And I was, practically begging my gold customers not to buy gold. Because I said, you take that money and buy these gold stocks, because I'd never seen them this cheap in my life relative to the price of gold. So I said, below ground gold was such a bargain, you have to buy it rather than the above ground variety. But I also saw the greatest combination of fundamentals that I'd ever seen for the price of gold. And I expect an explosion. Last year was the breakout, 2024, when gold broke above 2,000 and moved up above 3,000. But I think this move is going to mirror, at a minimum, the move from 2001 to 2011, where the price of gold was up sixfold. So if you take sixfold from 2000, that's $12,000 gold, right? We're barely a third of the way to 12,000 or a fourth of the way to $12,000 gold right now. We are so much closer to the bottom than we are the top. Yeah, I really wanted you guys to buy closer to 2,000, but I don't care. You got to buy it now. Same thing with silver. I was telling everybody 30 was the floor. You got to buy $30 silver. There was minimal downside risk. We barely ever went below it after I said that. And now we're buying $40 silver, $41 silver. The problem is, and I've talked to the guys at Schiff Gold, and I've talked to people I know at other gold companies where sales are slow. People just don't want to buy the high. Well, you know what? You got to get used to buying the high. If you don't buy the high, you're not buying gold and silver. You got to buy the high because we're going higher. And the longer you wait to buy the high you're going to buy. So you might as well buy it now, because if you wait, you're just going to pay a higher price. That doesn't mean you're never going to get a down day or a down week, but it's not worth waiting. You got to just read the writing on the wall here and recognize the historic nature of what is going on. In fact, even Bukele of El Salvador, right, the Bitcoin guy, just announced that he bought $50 million worth of gold for El Salvador, right? He was poo-pooing gold a few years ago when he was buying Bitcoin. Now, instead of buying more Bitcoin, he bought $50 million worth of gold. Congratulations. I'm glad to see that.
This week, gold made history, surging 4% to touch $3,600 an ounce for the first time ever, before closing just under at $3,590. That puts gold up an astonishing 37% year to date, a move that Peter Schiff has been warning about for years. Silver is following the same path, climbing above $41 an ounce. Schiff says hesitation is dangerous because waiting only means paying a higher high later. He points to the performance of miners. Gold stocks in the GDX index have already doubled this year, as proof that the bull market is real and accelerating. Schiff compares this moment to the 2001 to 2011 supercycle, when gold rose sixfold. If history rhymes, the trajectory from $2,000 could take us all the way to $12,000 per ounce. His message is blunt. We're still far closer to the bottom than the top, and missing this move will be one of the most expensive mistakes an investor can make. At the same time, Bitcoin, marketed as digital gold, is lagging badly. Despite ETFs, celebrity endorsements, and corporate treasuries piling in, Bitcoin has only gained 18% in 2025, while gold has more than doubled that performance. Priced in gold, Bitcoin is actually down 15% from its 2021 peak. Schiff highlights that even El Salvador's President Bukele, once mocking gold, has now pivoted, purchasing $50 million worth of gold instead of buying more Bitcoin. To Schiff, this is clear evidence the world is waking up and returning to real money. But here's the real shock. Schiff warns that the Supreme Court could soon side with Donald Trump in his effort to fire Fed Governor Lisa Cook. If that ruling goes Trump's way, the court may have to declare that a truly independent Federal Reserve is unconstitutional. That would hand the president direct authority not only to appoint, but also to fire Fed officials at will. Schiff calls this a monetary earthquake, because once global investors realize the Fed is no longer an independent central bank but a political tool of the White House, trust in the dollar collapses and gold takes off like never before. And here's why you need to stay tuned until the end of this video. Schiff lays out the exact risk this creates, not just for the Fed, but for the entire financial system. If Trump dismantles Fed independence, it won't just be policy as usual, it could mark the start of the greatest gold bull run in modern history. Stick with me, because what Schiff says next is the part that could change everything.
Now, if he could just sell his Bitcoin and buy even more gold, that would even be a better deal. By the way, Bitcoin was barely up today, in the face of a big move up in gold. In fact, year to date, Bitcoin is only up about 18%. I mean, that's not bad, 18%, but gold's up 37%. Bitcoin's supposed to be up a lot more than gold. It's supposed to be a turbocharged version. It's supposed to be gold on steroids, right? But it's only up, and it could easily finish the year negative. But the more important statistic on Bitcoin, again, Bitcoin is 15% lower today than it was at its peak priced in gold in 2021. That's almost 4 years ago. 4 years of 15% decline. We're almost in a bear market in the gold price of Bitcoin. This despite all the Bitcoin ETFs buying up all this Bitcoin. They didn't exist 4 years ago, right? The NFT craze hadn't hit yet. All the Super Bowl ads, all the celebrity endorsements. We didn't have all these Bitcoin treasury companies. MicroStrategy hadn't loaded up on all this Bitcoin, tens of billions of dollars worth of Bitcoin, and now all the copycat Bitcoin treasury companies didn't exist. We didn't have the Bitcoin president, right? We didn't have the strategic Bitcoin reserve. We didn't have a Bitcoin czar, right? So none of this existed 4 years ago, right? Yet despite all this, Bitcoin is down 15% against gold. And these hodlers are oblivious to all of this. They just look back to the very beginning of Bitcoin and talk about how much it's up. And they don't look at what's been happening over the last 4 years and question why, right? Gold has this huge move. It's doing exactly what you would expect it to do in the face of a Fed that's about to ease into rising inflation. But why isn't Bitcoin doing that? Why is Bitcoin behaving differently? Why is it following risk assets and not gold if it's digital gold? But people are so wedded to this cult that they don't even bother to question their own beliefs. They just assume as long as they hodl forever, they'll make it to the promised land, right? They've believed the Messiah. They just got to have faith, and they have to ignore all of the other realities that would cast doubt. But I don't know why Bukele decided to buy some gold. Maybe he's starting to lose a little confidence because he obviously could have bought more Bitcoin, but he didn't do that. So good for him, right? For coming over to the right side. I think the biggest thing, and I'm going to make this point right now, the biggest threat now to the dollar. And one of the reasons that I think the price of gold could go ballistic is because I think there is a good chance that the Supreme Court is going to side with Donald Trump in his ability to fire Lisa Cook, a Fed governor. Now, the only way that the court could really come to that determination, it's not going to be to rule that based on having an independent Fed where the governors serve with 12-year terms and they have employment contracts and that presidents can't really fire them unless there is a legitimate cause, right? Not just because they feel that they have a cause, but there is a demonstrable legitimate cause. And cause generally has to do with something you've done on the job, right? Some dereliction of duty, right? Not something that was dug up in your past because they went on a fishing expedition looking for dirt, right? And they finally dug something up, and they said, aha, you lied on a mortgage application, right? The only way I think that the Supreme Court could approve this is if they actually rule on the independence of the Fed, and they rule that a truly independent Fed is unconstitutional, which I believe it is. I never believed that the Federal Reserve Act would hold up to constitutional scrutiny, but it was never really challenged. But I don't think that the creation of what really amounts to, right, a banking cartel that has a monopoly on issuing these Federal Reserve notes, which are then going to be legal tender, I don't think it's authorized. I mean, the Constitution has 3 branches of government, not 4. Right? The Federal Reserve is not a branch of the government, right? You have the judicial branch, you have the executive, and you have the legislative. So if the Fed really exists independent of any oversight, it would effectively be like maybe another branch of government. But there's nothing in the Constitution that authorized. So I think the Supreme Court might say, the only way the Fed is constitutional is if it's subject to the oversight of some elected official, like the President of the United States. Now, the President of the United States is allowed to nominate the FOMC members, so why can't he fire them? He gets to pick them. Why can't he get rid of them, right? The court might rule that inherent in that power, the power to nominate is the power to terminate, because there's nothing in the Constitution that says that we should have an independent Fed. And I think the justices might say that would be against the Constitution to have such an entity. So I think what the Supreme Court might do is actually strike down the concept that the Federal Reserve is independent and make it clear that all the FOMC members serve at the pleasure of the president, and the president can fire whoever he wants for whatever cause he believes justifies the firing, because he was elected president, he's got the power, the people trust his judgment, and therefore, if he believes that a FOMC member, for whatever reason, is not fit for the job, then he can remove them. That is the risk, because that will destroy Fed independence. Now, yes, if Trump wants to nominate a replacement FOMC member, the Senate is going to have to approve the nomination. Now, the Senate might, right? The Republicans might, but even if there aren't enough Republicans who want to play ball with what the president is doing, he doesn't need replacement nominee. Even if they're short, they can still convene and rule. So as long as Trump gets rid of enough board members who oppose what he wants to do, so that his guys or gals are in the majority, then even if there aren't enough, so he can fire every single FOMC member until the majority that remains will do what he wants, because the policy is made based on majority vote, right? So if there's only 3 FOMC members left, it's two out of 3 wins, right? So, but this is going to show the world that there is no independent Federal Reserve.
Peter Schiff's message is clear. Gold's surge past 3,600 isn't a top. It's the start of something far bigger. With silver strengthening, miners soaring, Bitcoin lagging, and the Supreme Court preparing to rewrite the Fed's role, we are standing at the edge of a historic shift in money and power. Now I want to hear from you. Do you agree with Peter Schiff that the Supreme Court may destroy Fed independence? If Trump gains direct control of the Fed, will it spark hyperinflation or force a return to monetary discipline? And where do you see gold going by the end of 2025? $5,000, $10,000, or even $12,000? Drop your answers in the comments. I'll feature the most thoughtful ones in a future video. If you found this breakdown useful, hit like, share this video so more people understand what's at stake, and subscribe for ongoing updates. The gold shock Peter Schiff warned about has only just begun.